Welcome students to another lecture in the series. Let us continue with the Perquisites. It is a bit lengthy under the head income from salary, but very important also to understand. Let us see the value of contribution to provident fund or pension fund or other welfare funds. How is it treated as a perquisite? How we charge it to tax? So contribution made by the employer to a recognized provident fund. Keep in mind that it should be a recognized provident fund above 12% of salary is taxable. Then interest credited to that recognized provident fund in excess of 9.5% per annum is taxable. So this means that this 12% in case of PF and 9.5% in case of interest is exempted, but beyond that it is taxable. Contribution made to approved superannuation fund in excess of 1 lakh is taxable. Then contribution made to notified pension funds or schemes in excess of 10% is also taxable, and salary for this purpose is calculated as basic salary plus the dearness allowance. Then next in this series we have value of other monetary obligations of employee as per rule 3. Any monetary obligation of the employee which is directly paid or reimbursed by the employer is taxable in the hands of all the employees. Then another important perquisite, that is value of medical facility. If fixed medical allowance per month is received by an employee, it is fully taxable. If medical treatment expenses of employee or his family members is reimbursed or directly paid by the employer and treatment is in a government or a government approved hospital, then it is fully exempt from tax. If it is a hospital maintained by the employer himself, that also fully exempted from tax. If it is a private hospital or a nursing home, then it is exempt up to rupees 15,000 per annum. Beyond that, it becomes taxable. If the medical treatment expenses of the employee or his family member is reimbursed or directly paid by the employer and treatment is outside India, it is also taxable. So cost of treatment is exempt up to amount. Under this, we do have certain regulations. Certain part is taxable and certain things are taxable and certain are exempted. In that case, the cost of the treatment basically is exempt up to the amount which is permitted by RBI. Then lodging and boarding expenses of the patient and one attendant only along with him is exempt up to the amount again permitted by RBI. And cost of travel to and fro of patient and one attendant, if GTI of employees up to rupees 2 lakh, it is fully exempt because this would be the category of the low earners. But if it is more than 2 lakh, it would be fully taxable. Okay. Then next, let us have a look to a question here. Mr. Raghav, who is employed in XYZ Company Limited as finance manager, gives the list of perquisites provided by the company to him for entire financial year 2014-15. The medical facility given to his family in a hospital maintained by the employer company. The estimated value of benefit derived from such facility is 30,000. So we do need to see the tax treatment of it one by one. But let us go through the question first. Domestic servant was provided at the residence of Mr. Raghav. Salary of the domestic servant is rupees 1200 per month. The servant was engaged by him and the salary is reimbursed by the company. Then free education was provided to his 2 children in a school maintained and recovered by the company. For such education facility from Raghav, rupees 1200 per month for one child and rupees 800 for the other child because it is maintained by the organization. The employer was provided movable assets such as television, refrigerator, air conditioner at the residence of Raghav. The actual cost of such assets provided to the employee is 1,50,000. A gift voucher worth rupees 10,000 was also given on the occasion of his marriage anniversary, and it is given by the company to all the employees above certain grade. So we do need to compute the total value of taxable perquisites of Mr. Raghav for the assessment of 2015-16. Let us see the solution. See, for the medical facility, it is fully exempted. Why? Because it is, you can see that medical facility is given to his family in a hospital which is maintained by the employer company itself. So it is exempted. For servant, it is taxable. 1200 is paid to the servant, so it's 1200 into 12, 14,400. Then education facility, we know very well that 200 rupees is exempt, and beyond that it is taxable. So the total value of the taxable perquisites here, like it is given to us that free education is given, and out of that 1200 per month for one child and 800 for the other is being charged. So we are supposed to tax it like this. Then movable assets, we do have to give 10% of that amount, that is 10% of 1,50,000, so it would be 15,000 here. And you know very well that gifts up to rupees 5,000 are exempted from tax, so the rest of the 5,000 would go to taxability. So the total amount, the total perquisite which are taxable here is 36,800. Then let us understand that how the things have been done here. I explained this at that time even while we were doing the entry, that medical facility is fully exempt from tax if the expenses are reimbursed by the employer and the treatment is taken in a hospital maintained by the employer. See, these working notes are very important in order to obtain the marks in exam. The salary of the servant which is paid or reimbursed by the employer if fully taxable. Education facility of children in excess of rupees 1,000 per child is taxable. Since the education expenses of one child is less than 1,000, it is 800 only, so that is fully exempted. But the excess, in case of that first child for whom 1,200 amount is being paid, so that 200 is taxable, because up to 100 it is exempted. For one child he is paying 800, so that is fully taxable, fully exempted. And for other child he is paying 1,200, so up to 1,000 it is free, but beyond that it is taxable. So 1,200 minus 1,000 which is exempted, so 200 is the amount that we have charged there. And the taxable value of movable assets is 10% of the cost. I informed that. Gifts in excess of 5,000 are also taxable. Let us see another question. Ms. Neetu, a software engineer in Wipro, submits the following particulars of her income and contribution etc. for the year ending 31st March 2015. Compute her total income under the head salary for the assessment year 2015-16. The basic salary of rupees 40,000 per month is there, then a dearness allowance of 30% of the salary, of which 60% forming part of retirement benefits, children education allowance of rupees 200 per month per child for 2 children, free lunch for 300 days in office during office hours at the rate rupees 60 per meal. Remember, up to 50 it is exempted. We'll do that. Gift of washing machine of rupees 20,000. This is the purchase price. Rent free unfurnished accommodation provided at New Delhi, and its lease rent is rupees 25,000 per month. A motor car is also given to her of 1800 cc with driver was provided both for official and private use throughout the year, and it costs the company as rupees 2 lakh annually. Telephone facility provided at her residence, which costs the employer 24,000 annually. It is fully exempted. Cost of medical facility provided to Ms. Neetu and her family at private nursing home amounted to rupees 40,000, were borne by the employer. And the last here is that her employer provided her with interest-free loan of 18,000 for personal use. For this we have a limit of 20,000. Till 20,000 it is exempted. Let us see one by one. First of all, the basic salary that we will charge is 40,000 per month, so it's 40,000 into 12, 4,80,000. Dearness allowance, simply they are saying that it is 30%, so 30% of this basic salary, that is 1,44,000. Education allowance, we know very well that it is 200 rupees per month, maximum up to 2 children, so we have charged that only 200 rupees per month into 12 to make it annual amount, and into 2 for 2 children. And out of that we do have an exemption of rupees 100. For hostel it is 300, but for education it is just 100 rupees that is exempted. So we can subtract half of the amount from here, that is 2,400. Free lunch is given to her at the rate rupees 60 per day for 300 days. But I told you that we do have an exemption of rupees 50. So we can subtract that. Value of gift, the amount of gift is rupees 20,000, but up to 5,000 it is exempted. So 15,000 is charged here. For motor car, as because the car that is given to her is above 1600 cc, so 2,400 for the car and 900 for the driver monthly basis into 12, so 39,600. Telephone facility, I told you, is exempted. The rent free accommodation, unfurnished accommodation, the full amount 85,320. Medical facility is free up to 15,000, so 40,000 minus 15, so 25,000 will go to taxability. Interest free loan is nil, because I told you that it is up to 20,000 it is not it is exempted, and she took a loan of 18,000. So this is the gross salary after adding up these all, the amounts in the bracket are negative amounts, so we need to subtract this from the total, and rest you can just add these amounts up. And deductions there are and any, and so income under the head salaries is given to us, that is 67,94,320. Working notes are mandatory. I have explained these along with each and every entry, so I won't repeat it. This rent-free accommodation, you must understand, I didn't explain this at that time. Uh, See, salary for the calculation of rent-free accommodation is calculated, the basic salary, the DA plus the other amount, that is your education allowance. Okay, so it's 5,68,800. So rent-free unfurnished accommodation is taxable value minimum of these two things, that is either 3 lakh, the actual rent which is paid by the employer, or this 15% of the salary that we have just calculated. So 15% of 5,68,800, and the amount comes out to be as 85,320. And gross salary is the total of all after allowing all the exemptions under this. Thank you. Do write to me if you face any queries. If you have you're not able to understand any part of this, please do write to me. Thank you.